Good morning, everybody. It's the 6th of February. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. Apologies for the later start this morning, a few tech issues, but we're up and running now and looking forward to smashing the week ahead.
Yeah,
How you doing, Steve? How was your
yeah,
weekend?
it's great, thanks, mate. Well, not so much for Liverpool or
Or England
Arsenal
rugby
or
team?
Man City or England. yeah,
Yeah,
real sort of like a bit of an up and down one. Ireland did well in the rugby to start with, so
you got something to claim then.
yeah, exactly. Number one in the world, are they now? I think.
Got to be close, yeah.
Yeah, um, yeah, all good here. Friday was quite an interesting day. It was decent for
Absolutely.
our account, anyway.
That's for
Um,
sure. We'll
we
get
can
onto
dive
that in
into
a
that.
bit.
Yeah.
Yeah, I mean, obviously the catalyst for all this was non-farm payrolls. It seemed. I mean, obviously it was going to be always a huge risk trading ahead of that, but um, we lucked out, I think, or lucked out. It was all skill, I think, really. But yeah,
Yeah.
we'll come on to it in a minute anyway. So let's get through the latest headlines, what's moved markets over Friday and over the weekend. So in terms of the latest news, the US non-farm payroll number surged on Friday. It come in at 517,000 for January compared with expectations of an increase close to 190,000. So it was massive difference in the expected number versus the actual. According to the household survey, the unemployment rate edged lower to 3.4% from 3.5%, and there was also a small increase in the participation rate. There was also strong ISM data, stronger than expected, with the index strengthening to 55.2 from 49.2 the previous month, so well above the consensus forecast of 50.4, puts us well above that 50 level, which means we're in an expansion phase rather than a contraction. The US yields surged off the back of this. The US Treasuries posted sharp losses following much stronger than expected US jobs data, with the 10-year yield jumping above 3.5%. The dollar posted strong gains as well. We've been calling this for a while, expecting there to be some sort of correction, and there was a huge move to the upside on Friday. We'll come onto the chart shortly. But the much stronger than expected payroll data, there was a renewed adjustment in the Fed funds future, with fresh uncertainty whether the Fed would be able to back away from a hawkish policy stance. The dollar posted strong gains as yields moved sharply higher, with the dollar index at 2-week highs. There's been some fresh speculation over the weekend about the Bank of Japan, and the yen has slid as a result of that. The dollar spiked higher on Monday's Asian Open following reports that Deputy Governor of the BOJ had been approached to succeed the current governor, Kuroda. Given that Amania was a key architect of the current monetary policy, the rumours triggered sharp yen selling. Dollar yen had already surged after the US data on Friday and spiked to near 132.50 before a significant correction as the senior government officials denied the report. Equities lost some ground as a result of all of this as well. The higher yields and fears over a more restrictive Fed policy stance triggered losses for Wall Street indices and other global markets, and also hampered by the US-China tensions. We saw that they shot down a spy balloon over the weekend as well. And tonight, UK time, or overnight, we've got the latest decision from the Reserve Bank of Australia, who will announce their latest policy decision with forecasts of a further 25 basis point rate hike, taking overall rates to 3.35%. Okay, so plenty of headlines. Let's have a look at how this has all impacted the charts. Let's start off by looking at cryptocurrencies and see how they performed as a result of the massive beat on non-farms on Friday.
Yeah. Interesting sort of like close to the end of the week, really. On the weekly chart, Bitcoin, we've had a nice spike since the start of the year. January is obviously a very positive month for Bitcoin, but however, February's had a little bit of a turnaround. You can see this almost like a bearish outside candle. Didn't quite get there, but it is still, nonetheless, it's like a dark cloud cover or whatever we want to say. But it's a bad start for February for Bitcoin. Nice little reversal there. Will it continue? Well, we've got a few support levels really to sort of like get over before we see any further downside. 22,328 is a point where we've stalled on a couple of times, and we also posted a higher low on the 30th of Jan on this daily chart. Today's low is had a little flirt with that previous support level and reversed quite sharply. So we've had like 4 days of negative price action. Are we looking at a fifth? If we do manage to get a break below that 22,300, then there shouldn't be really much in the way of support until we get down to 21,500. So obviously, reminder of where we are on the long-term chart. We've seen this nice, well, coming up to a golden cross where the 55-day moving average or 50-day moving average, whatever you want to use, sort of like crosses over the 200-day moving average. That would be a golden cross because it's the market. But remember the last time we had a golden cross, actually, all the way back here, it didn't last very long, actually. So we got it here when we're up at 45,000. It did result in the spike to the all-time highs, but overall we had the death cross, which led to this huge sort of pullback all the way down to where we've been down to. So yeah, got to sort of like think about it in the bigger picture. They don't always sort of like signify you know, that major low. It sort of like has to sort of like it will be tested over time. Looking at gold, this was a gun to head trade I did. It worked out really nicely on Friday, and we basically looked at Thursday's price action, which was a bearish outside candle, and it was all on the back of that really, and there was a little bit on the short-term charts showing a little bit of negativity, but yeah, we broke through Thursday's low over non-farm payroll 1911 and continued the move lower, got down eventually to 1865. So we can see there's probably a little bit of a trend line from November that we've let me just take this out. I'll get rid of that now. Here's our trend line here, held quite nicely. We've got 1, 2, 3, 4, 5, 6 points on that trend line, so that'll be key moving forward. We can see what price action previously around the start of Jan traded quite well between 1825 and 1865, so there should be a little bit more support there. We can also look at maybe Fibonacci retracement levels from the move that we've seen. The low we saw 3rd of November, all the way down at 1616, the high all the way up at 1960. That leaves us with 38.2% fib retracement is at 1828. So that would be definitely a level of support because it has provided resistance and support in the past. So that's probably the level to look out for if we do manage to get a break of this upward supporting trend line. Silver, that has sort of like moved lower as well, same sort of price action, shooting star candle we had, and then we had this extension lower, breaking through support at 2276, and we ran into the previous swing high, which was resistance, now turned into support as it did in 6th of December. That's all the way down to $22. We've got support here. So on the front foot this morning, we've seen a nice little bounce off this the lows and heading higher. But obviously, this will be all driven by the dollar index, which Joe will dive into shortly. On the crude oil side of things, we have seen this this negativity continue. We had a little bit of a spike higher initially over non-farm payroll. Let me see. On the hourly chart, we can see it. See this nice little move higher, spiked higher above the Ichimoku cloud, and then we formed an evening doji star formation or an evening star formation, and it reversed really aggressively. So that little bit of confidence that eked into the market with all those the huge increase in job numbers didn't last very long, and the overall trend in crude oil is continuing. We still see this move downwards continuing. Looking at where the sort of levels of support and resistance to watch on a daily basis, we've got 72.58, which is just below here. We've got it. We're back below the 55-day moving average, and the next level of support $70.20. From a resistance perspective, 82.60 really. That's a clear resistance level. We've seen it on multiple times, and really need to clear there to sort of like get the bulls happy again. At the moment, the bears are winning through. Brent crude oil, similar sort of price action. Saw the spike higher over non-farm payroll and the rejection, and support coming in at 77.60 and 75.26 on the Brent side of things. That's trading just over a $6.50 premium now to WTI crude oil. Natural gas continues this aggressive move to the downside. We've seen 3 negative days in succession. I'm not going to try and catch a falling knife with this. I'm just going to let it play out. If we do get any sort of rally up towards the 350 level, it's definitely worth a good risk reward strategy to sell into that bounce, but we're not getting it at the moment. It's just continuing to move lower. Gaps on the chart all over the place. Really looking negative on natural gas. So yeah, let's let Joe take a look at the currencies and see if we can get some indication there as to where we could place our bets today.
Yeah, okay, thanks, Steve. So let's start off first of all with the dollar index, because obviously it's all important when it comes to currencies. I'm going to actually take a look at the weekly chart to start with. So prices obviously had this massive run higher throughout 2021 and 2022 before eventually topping out in September last year. Then we've seen prices correct quite sharply to the downside, finding support at around a 50% Fibonacci retracement level at 101.99. Now, if we look at last week's price action, we can see a really strong bullish candle. So we made new lows on the week before closing very much on the highs to post a bullish outside candle on the week, and also seem to have broken out of this kind of very short-term, well, not short-term because it's a weekly chart, but a very kind of narrow wedge, and we've seen a break higher from that, and we're pushing higher again today. So that indicates for me that we are going to see a reasonable sized correction on the dollar index to start looking for higher prices. In terms of where, well, again, we'll be using the fib levels from these highs that we posted in September down to these lows that we posted last week, and be looking for fib levels, the first of which is the 38.2% fib, which comes in at 106.15. So I still think there is scope there for higher prices on the dollar index, as we've been talking about for a while. Let's just take a look at the daily and just see how things are shaping up there. So we can see on Thursday, we got some indications that a turnaround was potentially on the cards because we saw this piercing line candle. We made new lows on the session, gapping lower, filling that gap and taking out more than 50% of the losses that we saw in the previous session. Then we saw a gap higher on Friday, and the non-farm payrolls really just continue to push that higher. Short term, we do have some resistance at 103.45 to contend with, also a short-term downtrend line, which is potentially going to cap upside. But for me, it looks pretty strong following the completion of this head and shoulders top pattern. So really, I'm going to focus most of my analysis today on the majors because of this move on the dollar index, it's impacted all of them, and there's some pretty sizable moves on a lot of the charts. To start off with Aussie dollar, we can see here, following a couple of rejections at major resistance up here, so we had a 61.8% fib level at 70.91. Above that, we had these swing highs from back in August. We failed to overcome those levels, failed to get a close above it, and then on Friday we saw this massive bearish red candle that formed, and we gapped lower again today. We filled that gap already, which might attract some fresh selling opportunities. We've also got a short-term uptrend line here, which is broken, and we've moved below that today. So suggests again that we are going to see a correction here in Aussie versus US dollar. Again, let's focus on the fibs to give us some indication of where prices may go. First downside target for me would be around here at 67.80, which is the 38.2% fib level. Let's take a look next at Euro US dollar. So as we know, this has been trending really nicely higher. We had a 50% fib level at 109.42. We closed above that level on Wednesday, but then swiftly rejected it on Thursday, closing back below it. And then on Friday, obviously as a result of the non-farm payrolls, we saw a really meaty and impulsive move to the downside, taking out that short-term uptrend, and another gap lower again today. So it looks as though any rallies in the short term will be capped at around 108.85. So I'd be looking for opportunities to sell with a fairly tight stop loss above those highs in anticipation of lower levels. Let's just get rid of that level. In fact, let's just get rid of that whole thing. And now we can start targeting a move on the downside. Again, let's focus on those fibs going from the lows in September to the highs that we posted in Feb. The 38.2 comes in at around 104.60, so potential for a correction to get all the way down to that level. We do have some minor support at around 107.36 that may do a job in the short term, so we need to be aware of that. Let's take a look at cable. So this was stalling ahead of the number, not like euro US dollar, which made new highs. We can see here this blue line prevented prices from moving higher on a number of occasions here. Prices were really trapped in a very tight range for a period of time here before finally breaking down. The breakdown actually happened ahead of the non-farm payrolls on cable. We actually saw this on Thursday, and then we just backed that up with further selling on Friday following the release of the number. Again, a small gap to the downside today, and we've recovered that to fill that gap. But it looks as though we are going to see lower prices. 38.2% fib level here comes in at around 116.48. So that would be the kind of first target. Although having said that, there is a swing low here from the 9th of January coming in at 118.41. So for me, it is a case of now selling into rallies here, favouring a further move higher in the US dollar. Let's take a look at New Zealand dollar, US dollar. So this was potentially forming an inverse head and shoulders. We were attempting to break through the neckline at 65.30, failed to do so, and now we've seen a big move to the downside, followed again by another gap overnight. Looks as though we've done most of the job of closing that gap, so maybe that will trigger further losses lower. So I think we can maybe talk about invalidating that inverse head and shoulders for the time being, and maybe focusing on this next level of support, which once I can get rid of this, remove. So I'll be focusing now on these levels, these swing lows around 0.6191, and then the 38.2 is below that at 61.31. Let's take a look at some of these other dollar markets as well then. So not a huge move either way really in dollar CAD. I mean, yes, it was a decent move to the upside, but nothing really suggesting a wholesale reversal on that at the moment. There is a 38.2% fib level fairly close by at 132.25. So look at dollar Swiss, big move higher on that. So still in a bit of a bearish channel, so needs to do a little bit more for me on that one before we can get too excited. I think there's probably better dollar-based options, maybe Aussie, New Zealand dollar and sterling, and potentially euro US dollar as well. And then if we take a look at dollar yen, this was really interesting. So this was failing to come get above resistance at 130.39. Looks as though we formed a bit of a triangle pattern or a wedge, and then we saw a big break above that on Friday and gapped further higher following the yen weakness that we saw as a result of that speculation over the weekend. So potential here for higher prices. I'd ideally like to see a fill of that gap, look and see how it reacts at that level, and then maybe we'll see higher prices from there. So looking pretty positive for the dollar index in the short term. What's going on with indices, Steve? How did that impact? How was that impacted by Friday's data?
Yeah, indices had quite an interesting one overall. They obviously, if we remember back to last week, they were on quite a decent rally. Let me just share the screen. Let's take a look at FTSE first. FTSE formed a new all-time high. Woo, go FTSE. But it sort of did reverse quite sharply from there. If we go back all the way to May 2018, got that 79.03 level, got up to 79.13 on Friday. That was the top, and today we've opened up just below there, just around the 7900 figure, and moved sharply lower, basically on the back of the non-farm payroll really, and how different geographies are looking at it. The indices in the overnight session have taken it quite negatively. China, Hang Seng, all down over 1%, and the US, our US sort of indices, all are down around about 0.5%, just below 0.5%. So yeah, a little bit of a reversal here, but it still feels pretty bullish. We've got the golden cross on the moving averages, 55-day over 200. We got that at the start of January. We've seen a really lovely uptick since then. So yeah, expect you know, probably overdue a little bit of a correction, although we did have one and we can see sort of like when we peaked out in the middle of Jan, had a bit of a pullback, and now we look like we're kicking on. So quite important this week's price action for FTSE. If we look at the weekly chart, obviously a very, very strong candle last week. So I'll consider sort of like buying dips at the moment, unless we get a break of the 7,700 level. I'd definitely be looking for that to move higher. Similar sort of price action in the DAX or in Europe, Germany 40, the major indice there, and that has continued a nice strong rally higher. Did top out at 15,568, trading a couple of hundred points lower than that now. So yeah, a nice little retracement as well from there. But again, a little bit of a correction won't do any harm at all. The level of support coming in just below the 15,000 level, 14,925, all the way up to 14,960, and that previous support here, if we go back all the way, 14,828 was a major one, all the way from 2021 through the sort of early part of last year. Then it acted as resistance, and we're above it again now. So lots of support below on these indices, and maybe we'll sort of like get some sort of pullback today as this understanding of the non-farm payroll and the jobs data filters through. We can mainly see it in, let's take a look at the daily charts actually, because these weekly charts aren't giving us a lot of information. But we can see over the last 3 days since last Wednesday, basically, we had a doji candle at the previous swing high on the Dow. So that was a little bit negative. Maybe sort of like ideas of the non-farm payroll were filtering through then, that it might be a bigger number. And Wednesday, Thursday, Friday, all negative days. Nice spike in both directions on Friday, obviously with the volatility of non-farm. But we took out Thursday's low, and we're also challenging Friday's low today at the moment, at this point in time. But really, we'd sort of like there's a long way to go before we really test the this uptrend all the way down. Probably I'd say even 32,900 would be a level to watch. That'd be like a neckline of this potential double top formation on this daily chart. And overall, you could probably say there's maybe a little bit of a treble top in there if we break the 32,450. Nasdaq, this is really sort of like kicked on really aggressively. You can see it's quite an exponential type of impulsive rally, very aggressive impulsive rally. And Thursday we saw a shooting star. So we saw the first signs of maybe a little bit of a stall. Price action just failed to hit that double bottom measured move target, but close enough, as we said on Friday. And overall, yeah, we're stalled around a 38.2% fib retracement level. So of the whole downward move. So rally back up, 38.2% fib retracement, and corrected low from there. So we got these shooting star candles to contend with now. If we do get a break below 12,450, then I think it opens up the downside all the way down maybe to 12,175 to 12,200. So Nasdaq may be ripe for a little bit of early failure. Let's keep an eye on that. Maybe a good gun to head trade idea. There goes my morning alarm, which I still haven't just worked out how to switch off. S&Ps, that similar sort of price action to Nasdaq. We've got a shooting star candle, a little bit of an indecision on Friday. Had the spike higher, didn't quite take out Thursday's high, but it did penetrate Thursday's low, and we've also taken out Friday's low now already. So that's looking a little bit negative at the start of the day. Will we get the follow through to the US session? I suppose we'll have to just wait and see on that. But yeah, it gives us a few little opportunities. You know, I'm a big bear on the indices. I love to sort of like sell the indices because you just seem to get a more aggressive move out of it. And I haven't got a lot of patience. So that might be what I'm looking for the gun to head, which we can talk about with a smile on our face.
Indeed, we can. Yes. So on Friday, I mean, just a quick roundup first of all. Gun to the head challenges where Steve and I have picked trade ideas live on the stream. As if we had a gun to our head, what would we trade right now? So we're under a bit of time pressures and need to come up with something pretty quickly. The idea being that hopefully we can hit a winner between now and 9 o'clock UK time. That's when we close these trade ideas out, unless of course they hit the stops or the targets in the meantime. Each of the ideas we come up with must have a risk reward ratio of better than 2 to 1. We're actually doing this now with a live account. So we've hooked up an Awanda account via TradingView and trading these signals for real now. So previously we'd been doing them on a simulated basis. We've built up a pretty good track record doing that. So now it's time to put our money where our mouth is and go live. So we got off to a pretty poor start from the start of the year, really, but we have reiterated throughout that because of the risk reward profiles that we look for on these trades, we only really needed a couple of wins before we got ourselves back on side and looking positive again. And that's indeed what happened on Friday. So we made some pretty good calls. Steve was selling gold and I was selling New Zealand dollar versus the US dollar. Let me just bring up my
Sorry.
screen. Get off, Steve. This was the New Zealand dollar US dollar trade. So selling that early on. Saw a little bit of drawdown against us, but then bang, went straight to target, which is very nice indeed. And Steve, I don't know if you've got the gold one up that you can show us as well.
Yeah, second.
If you just go to your gold chart, it should still be there, shouldn't it? Oh, no. Okay. Steve published it to the ideas. I didn't,
Yeah,
certainly.
I did
So,
publish the ideas, but I managed to publish all 4 charts because I
right.
was
Okay.
talking. But then I thought, oh, I did that because I was talking about a potential shooting star candle on the weekly
Yeah.
after a doji. Daily chart highlights a bearish outside candle, which you could see engulfing the previous 2 weeks of price action. And at short term, we had just moved below the 4-hour Ichimoku cloud, and we were already below the 1-hour Ichimoku cloud. So I did that, and you can see almost, if you squint, you can see in the corner here, it hit target shortly after non-farm payroll. So played out really nicely. Obviously, I was concerned about the volatility. The stop was quite tight. It was only probably about $10, but I was targeting about a $33 target with a $11 stop or something. So around about 3 to 1, just shy of that when we actually got the trade on Oanda. So yeah, worked out pretty nicely, Joe, and the account took a nice little bump on the back of that. We can
How's it
sort of like,
looking? Can you see? Are you logged
yeah,
in?
we can see it here. We got our net asset value now just above the $2,000 level. I think we were down at just below $1,900 early
No, I don't think
Friday.
we went that far. 1930, I think it was.
Oh, was it? Oh,
Yeah.
yeah, right, okay. Oh, so
Don't
what? I was
write us
panicking
off.
for no reason then, yeah.
Yeah, absolutely. So we
Um,
risk 1% per trade on these ideas. So the maximum kind of that we should be losing is around 1% of the balance. 2% obviously if we both get it wrong. But on Friday we both nailed it. So that puts us back in positive territory. We always say whenever you go live on something with a trading account, it's almost like immediately you will go into drawdown. It's like you have to
yeah.
pay the entrance fee basically to start trading. And that seemed to be the case here. So hopefully now we can run with this, Steve, and put together a bit of a streak
It would
and,
be
and
nice, wouldn't it?
make some returns. Obviously, it's going to be a challenge today because there's already been some pretty substantial moves. So do we fade those moves and try and maybe look for a bounce in certain things that are oversold, or do we go with the trend? I don't know if you've got anything ready, Steve.
I mean, the one that I was looking at that I really sort of fancy, but it's more like selling a break of the DAX, 15,345. It's held support quite strongly on this 4-hour chart on multiple occasions, 4 or 5 times now, but we just bounced off it again. So really, sort of like, if I was to sell it now, I'd need like at least 100 tick stop. And even then I'd sort of still feel like I'd be wanting to sell it. So that's a sell a break trade idea. I am sort of like erring towards selling indices. The other one I was thinking about was oil, maybe selling oil, little bit maybe of a bearish flag forming. Will we get that continuation through? That's where gold, obviously, you can see that the gold sort of played out really nicely, and we're back up to where my target level was. But again, potentially we get a little bit more of a pullback before I'd like to sell that. So I'm sort of struggling, mate, at the moment. If you were to hold a gun to my head, then I'll probably go with oil. I expect this continuation lower to continue. We had a sort of obviously the spike higher, which rejected, and yeah, a little bit of a gentle rally this morning. So I maybe look to set shorts at this level. Where are we? Let's see if I can get something on. Getting around 74.01. By the time I put the trade on, it might be a little bit different. Something like that. Let me see. It's like around about a 4-to-1 risk reward, Joe. Just like really looking at this bearish flag formation.
Get it on, mate.
Break of that, and then the measured move target will be somewhere like, there's the flagpole. So the measured move target is somewhere down there. I'm not sure if that'll play out all today, but I'm happy to go with a 4-to-1 risk reward of that. So I'll set that while you're having a look. Oh, let me get this on the Oanda chart. Silly me. It's called something different over here. I'll set it up here, mate.
Okay, cool. Right, let's try and find something, shall we? In fact, I've found something, and I'm going to go with Euro versus New Zealand dollar. So this is the daily chart here. Now, just taking a look at price action over recent months, we can see we had a decent move higher, then a sharp correction lower within a channel, then prices consolidated for a period of time in this kind of region here between 166.73 to 169.92. On Friday, we saw a pretty impressive close above those resistance levels, which for me indicates maybe we are going to see a continued move higher. We have seen a gap to the upside today. Looks like we've already filled that as well. Let's take a look at the intraday charts. This is the hourly. This is the big level of resistance that we're talking about in red. And it looks as though we're maybe trying to push higher. So maybe some sort of continuation pattern forming here in the very short term in the form of maybe a pennant or a bullish flag. So I'm going to try and buy that and expect to see some higher prices. So let's go something like that for a stop. In terms of targets, if you scroll over to the left-hand side, are there any levels that I can use for reference? Let's maybe go with a fib of this period here. See if we've got anything nearby, maybe a 78 or a 61. So pretty much at the 61, which doesn't fill me with a lot of joy. Right, let's now home in to this 78.6 to see if there's a little level there to target. There's one for me. So Steve, if you're ready,
Yeah.
I'd like to buy Euro New Zealand dollar.
Buying it.
Yep.
Go for it, Joe. Wow.
I'd like to have a stop loss at 170.09.
Yep.
And my target is 172.90.
So about a 3-to-1 risk reward, 3.18 or something.
Yep, that's about right.
Right, we bought it.
Favoring euro over New Zealand dollar. So yeah, that's my trade of the day. So we've got two on then. Let's see how they go. And yeah, should be an interesting one. Okay, let's take a look at the day ahead, what information we have out today, and also line us up for the rest of the week. So in just under an hour, we've got the UK construction PMI index. That's out at 9:30 UK time. Then we've got the Bank of England, one of the speakers at the Bank of England making some comments at around 5 o'clock UK time. So that could move the dial on anything linked to sterling. And then throughout the rest of the week, as we mentioned overnight, we've got this Reserve Bank of Australia policy decision. And tomorrow, we've also got some further comments from the Fed Chair, Jerome Powell. And then on the 10th, we've got the latest read on the Canadian employment report. So a bit of a lighter week compared to last week, but not really expecting anything less in terms of volatility following the moves we've seen. So yeah, it could be another interesting week. Okay, thank you everybody for watching. Sorry if we haven't caught any markets that that you've mentioned, please come back tomorrow and request them again. We've already spent a bit too much time on this today, but yeah, we love your input. Hello from Ghana, by the way. We had a viewer from Ghana this morning, so welcome to you. And yeah, let's hope for more of the same this week. Keep watching, guys, and have a fantastic day.
Yep. Cheers all.
Bye bye.